Hello everyone, this is Beyond Dale with another edition of the weekly Forex update, and this will actually be the last update for the year as we close out 2013. I hope you had a happy holiday with your family, and I wish you all the best in your trading and in life in general for 2014. Okay, what this is the chart we're looking at here is of the Australian dollar, and we're seeing that the currency is testing support here just above 88. So if you I'm going to draw a red line here. This illustrates the support. This is a daily chart. This is the weekly chart. So the market is testing 88. This is about 88.50, and we had one test back in August and one in mid-December, and now the market is testing that level again. A close above a close above 90 will signal that this market is trying to put in a bottom and is about to reverse. So if the market closes above this swing high, here, it will be the first sign of the market trying to reverse. And if it closes above 92 level, that will further indicate that this is actually a double bottom and the market has reversed. But as we can see, the market is in a huge downtrend. We had a retracement and the trend is down. So if I wouldn't be taking a long position in here, because the market is at risk of breaking down further below this area of support. So unless I had concrete evidence, I wouldn't be putting on a long trade. I know there are a lot of traders who like to trade reversals, but you will find that you'll have more success if you stick with the trend, which is down at this point in time. Okay, let's move on to the euro currency. And what we saw last Friday is that the market spiked up. If we take a look at the 15-minute chart, we see that the market opened at 136.80, was meandering along, and we had a huge run up of over 200 pips on the 27th, and that was really because we had very illiquid trading conditions. Everybody was out on holidays, and I guess the smart money decided to make a run and take out the stops above 138.50 or so. This last swing high, so the stops were cleared above that level, and then the market settled back down. And what we see here on Monday morning is the market attempting again to close above this 138.50 level. And this level is significant, as I have pointed out on a number of occasions, in that the big picture on the euro is that we are in a head and shoulders bottoming scenario. Let me just draw the left shoulder. It's a right shoulder, a bit extended, and this is the head. And the market looks like it is trying to break above the neckline, which is about here. So this is the neckline, the shoulder, left shoulder, right shoulder, and head. And any close above this neckline here Yes, I know this is not the straightest line, but any close above the neckline or above 140 will signal that a reversal has been completed in the euro, and you could expect for 2014 that the euro will trade with a bullish bias. So the dollar would really be under attack against euro if that scenario plays out. Interestingly, we have a similar scenario on the Canadian dollar, US dollar, Canadian dollar, in that if you look hard enough, this could be the left shoulder, this could be the head, this could be out the right shoulder, and the market is attempting to break above neckline resistance about this 106 area. So if this market breaks above this area, we could see the US dollar strengthening against the Canadian dollar and will trade with a bullish bias. So that is the big things we need to look out for. And naturally, if the market does break above, I would be looking for to be on the bullish side of things and not the bearish side. So we have some huge opportunities coming up in the forex market. What we have now is a situation where currencies are diverging, in that US dollar is strengthening against Japanese yen, as is illustrated here. It's strengthening against Australian dollar and the Canadian dollar. So US dollar is strengthening against those three currencies primarily, and weakening against the euro, the Swiss franc, and the British pound. So we'll keep an eye on this situation, and I will have another update for you next week. I hope you enjoy the trading week and have a happy new year when it comes. Not too much drinking. Okay, thank you.